This is your dose of daily market wisdom with master trader Nick Santaigo. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santaigo. I'm Kerry, Lutz. It's 12/21/22. The winter solstice is setting in. Show number 451. Well, while the rest of the country is freezing, the stocks are thawing out today, Nick.
Yeah, we're getting a good little rally on our hands to start the day at least. We'll see where we finish. That's always the important part of the day. But the news is kind of funny. We had some positive reactions last night to earnings from Fedex and Nike, and the news is telling us that that's the catalyst for the rally. But I beg to differ. I think it's the winter solstice. That's what's helping the market right now. That's what I told my members to watch for, the turning point. I said, this market's bleeding down into the winter solstice. This is often a turning point as far as the seasons go, as you know. And very, very often it turns markets around too. And it's right on cue. And let's see if it sticks the landing today with a positive session into the close. But I do think this could be the start of Santa Claus coming to town for a week or so.
A Santa Claus rally. Hey, well, aren't you the bearer of good tidings, Nick?
Well, I like to be sometimes, Kerry, but I'm not looking for him to bring a new bull here, but I think a feeble bounce can be done.
Well, everything is going so well. All you have to do is read social media because, as it turns out, the Department of Defense and the government have been doing one giant psyop. Social media equals psyop. It couldn't be any simpler than that, could it?
Well, I mean, if it took people to see tweets from Elon Musk or others to figure that out, they really should have their head examined. Yeah, I could have told you that a long time ago.
There's not, the only surprise to me is how extensive and pervasive it is. I don't want to get into it, make it a show about social issues because this is a family show and we try to stay away from obscene material. I would just make this statement. I knew it was bad, but when there's 115 former intelligence agents who are dictating what you can see on the faux book, then it's even worse than I imagined. I thought it was all down to algorithms. I didn't think they were directly... No wonder the damn thing's so slow because 5 people have to read your post before they can approve it. Anyway, let's get back to the market. So FedEx's earnings were disappointing, though, weren't they?
I don't even know what the numbers were, Kerry, to be honest. What I look at all the time is I just look at the reaction. And the stock yesterday was down into the number, had sold off for about a week, 6 days actually. It was trading down to around 162. Today it's trading at around 171 at the moment. Did go as high as 174 and change. But again, when you're down, what happens is you get such bad expectations, right? Nobody's expecting anything good. And then all of a sudden you surprise a little bit better than expected. And the market already baked in a sell-off and it's a little bit better. So you get a bounce. This is not a great stock right now. It's not a great stock market right now. But again, when things are so dire and you've had a big sell-off and you're a little bit better than what everybody anticipated, you get some short covering, you'll get some people buying into that news. So that's really all it is. And, you can make the same case for Nike. I know Nike reported earnings. A lot of people are, going giddy over it. It's up 13%. The truth of the matter is the stock, just like FedEx, was down 6 days in a row. And it wasn't down in a little way. It was down from 116 down to 102. So, it had a big sell-off. And today it's back to, 116 and change. So, again, I would never make too much out of any of this stuff. But that's how markets act. They act on expectation.
Yeah, couldn't agree with you more. So we got the rally is pretty broad based, but the one notable exception is the hotel industry.
Yeah, yeah, I'm seeing, everything is green on my screen really across the board. There's not much red. You got the sporadic stock here and there. You're seeing little weakness in some individual names, but really the hotel stocks caught my eye today because I'm seeing, Hilton lower. Marriott's come back a little bit, but that was down a little bit more earlier. And then you have Host, that's down pretty big today. Hyatt is down. So the hotel names under some pressure today. But I just thought that was interesting. Anytime you get a big rally or you have a big sell-off, I look for the one industry group that's standing out that day, doing the opposite. So in today's rally, I'm looking for stocks that are weak. Another group I'm seeing that's a little bit weak too is also stocks like Palo Alto and this cybersecurity, cloud security stocks. They're a little bit weak today as well, and those charts are not looking good. So there's two groups that I isolated today: hotels and again, cloud security stocks. They're pretty weak as well.
Hey, can you just give us an insight to housing stocks? Obviously up today. How have they been behaving recently?
Well, the housing stocks, believe it or not, have been fairly strong. Now, a lot of them look a little bit top heavy here, but they've been acting very, very well because yields have been moving lower. So if you take a look at like Lennar, I call that the top housing stock. Today, that's up 2%. DR Horton is up 2.7%. KB Homes is up 3% today. These charts are actually still very strong charts. A lot of them, though, are getting a little bit overbought and extended. But I like to follow for housing this ETF called ITB. It's the iShares U.S. Home Construction ETF. And that one to me still says there's potentially a little bit more upside to go for the housing stocks before it's over.
Yeah, I'm just wondering because the housing stocks always predict these interest rate hikes, right?
Yeah, well, anytime rates go up, I mean, and they go up significantly, that's going to hurt housing because it makes mortgages really unaffordable, right? So that's the kind of the clincher there. Higher rates, lower housing prices, lower rates, higher housing prices. They kind of move, in that inverse lockstep relationship.
Yeah, and we will see what happens with the rates. Hey, gold is catching a bid today.
I mean, what could you say about gold, Kerry? It was up huge yesterday. It was a monster move for gold, and today, monster move yesterday, and today it's up, about 1/4%, continuing to move higher. But as you know, and I've said it on here before, gold should get up to that 1875 level. Right now, we're at around 1831. So we still got more upside to go for gold. The pattern and the chart is still very strong.
All right, and we should talk about silver because it broke $24. So that means it's up it was up close to $7 from its low.
Yeah, silver has just been on fire, and this thing just doesn't seem to want to stop. I'm bummed because I sold out of my silver plays, and I mean, I had just, made a killing in that area, and I'm waiting to get back in, and it just is not giving me the opportunity. So I have to wait it out a little bit longer. But I told you silver is going to be a monster, and silver is just really on a tear here. Now I'm almost begging it for a pullback here so I could jump back on board. But in the bigger picture, silver's got a heck of a lot to go, Kerry. I'm telling you, it's going to make new highs. In the shorter term, we need a pullback here. Hopefully, one that will allow me to get back in.
All right. So, what about the silver miners, the juniors? What's happening there?
The silver miners are on fire. I mean, they just looked really, really strong. They've had a sensational move. You're starting to even see, the talking heads on TV. Now, somebody sent me a clip last night. They're even talking about the silver miners, right? So it goes to show you those guys are always late to the party. But now they're looking at these kind of stocks. But today you have a good move in gold miners. You have a good move in silver miners. The juniors are acting well. The charts are all pretty good on silver miners, junior miners. And again, I don't see any real issue with those charts at the moment. As long as precious metals can hold firm, these miners probably still go higher from here.
Okay, so let's talk about inflation because it's tied into all the commodities, oil, gas, as well as the ag commodities because you can't produce food on the scale that require it without energy, obviously. So, what do you think is the inflationary outlook for 2023?
I think it's going to be just very similar to what we had, recently. I don't think we're going to go, off the handle with inflation right now, but it's not going down like these people think it is or these talking heads say it is. That just doesn't work like that. And then once the central banks come back in and eventually cut rates, because that's what they're going to eventually have to do.
Do they have a choice? They don't have a choice.
They don't. They're not going to have a choice. That's going to be inflationary, and then you're going to see the next big commodity boom. And I know a lot of people don't understand that. A lot of people don't think that's going to happen. But these stages don't end with one big run. They end in multiple moves, and they end in stages. And we're not even in that final stage yet. So, we'll get a lot of choppiness going forward. But, we'll get inflation again, and it'll be a pretty good, surge of inflation.
All right. So I got a couple of years on you, as you know, and I remember the inflation of the late 60s throughout the 70s and into the 80s until Reagan came along, until Volcker raised rates to 20+%. And regardless, there is a cycle involved here. And the fact of the matter is that that it doesn't just go away because the Fed snaps its fingers. There's a lot more going on here than just interest rates. Besides supply chains and all that, it's a cycle, is my point. And the cycle didn't just end.
I agree 100%. And I couldn't say it any better. And, what you've had here, though, you've had rates go up, not only in the U.S., but we've actually even seen the European Union raise rates. Now, here's the second half of this big problem. Now, Europe has a broken bond market. Everybody knows that. That's not a secret. Their bond market, exactly. It's a mess, and there's no fixing it. And that's why you're seeing, the ushering in of this central bank digital currency. They're probably going to be the first to go with a digital currency. Well, mark my words, we'll see that probably next year at some point. Even our own central bank here, the Federal Reserve, is doing a 12-week pilot program. They're probably halfway through in New York City. So again, this is going to be the new paradigm shift, so to speak, going forward. And everything is tied in. Everything is connected. There's no one area that is not connected to another. Everything is linked up. And these problems are going to be tried, they're going to try to masquerade them. But I'm telling you, the next time you get a big sell-off in gold, and we'll get another one, that is going to be the one where everybody should participate in. So if you missed the silver move, silver's already left the station. So, you wait to get back in lower. But on September 1st, I bought physical silver. I told my members to buy physical silver, and they were complaining and whining about $4 over spot for coins. And now you're paying $14 or $18 over spot. So, again, you're going to get a shot at gold. And I mark my words, Kerry, nobody's going to want to do it when the time is right. But the inflation moves, like you said, they come in cycles. And just like trading markets, they don't just go up in straight lines. They have big corrections like everything else. Everything is a chart. And, you'll have another big inflationary run down the road.
I couldn't agree with you more. The only surprise is how long it took, but we did have inflation. We had inflation in asset prices because all the money went into assets. I had David Stockman on, and I asked him his biggest regret during his Reagan years, and you know what it was? He said that they didn't push for sound money, and what's happened since is that like household assets have gone up 100-fold, and household income has gone up like 20% over the past 40 years. And that's an unsustainable thing. And it's strictly a result of the money printing, unbridled money printing by the Fed.
Absolutely. And if you read anything from Milton Friedman, who I believe put out the best content ever out of any of these economists or anybody that is from academia, if you just read Milton Friedman's work, he basically spills it and tells you everything. This is not that difficult. All the stuff that we're seeing is a result of massive money printing. And then you have to remember, Kerry, the U.S., what is the U.S. debt now? 31, 32 trillion and growing. These guys are passing a new bill. The Republicans and the Democrats, they're over there doing more money spending. I mean, it's just out of control. It's out of hand. And, unfortunately, we're at the end of the rope now. This is where you're going to pay the piper. It doesn't mean it's going to be tomorrow, but the next few years, I mean, it's going to be unlike anything that we've seen in our lifetimes, in my opinion.
For sure. For sure. The only surprise to me is that it took as long as it did, but there really is no going back on it now. And that's the way it goes. Well, hey, I don't think we'll talk much about Bitcoin till it makes its next move, other than to say, pretty much steady, right?
Yeah, I agree. We've beaten that thing to a pulp. We'll talk about it when it gets to 11,000.
All right. When it begins its descent, which probably will be sooner than later, and we'll leave it at that. Anyways, that's it for today. Look for sporadic shows coming up for next week during the holidays. Unless something big happens, then we'll be on it like white on rice. In any event, Nick, we'll talk to you on Friday. Make sure you go over to inthemoneystocks.com. Check out Nick's trading record, his latest calls, especially silver, nat gas, and so many others. And the Twitter feeds are at ITMS, at Nick Santiago01, at Kerry Lutz. Emails welcome, KL@kerrylutz.com. Nick, talk to you Friday.
Sounds good, Kerry.